Hey there traders, today I'm going to do a video for you. It's one that I've been meaning to do for quite some time, and it's on how I just put on trend lines. I get a lot of emails from people suggesting some charts and asking me are they accurate, and I find a lot of people get the simple things wrong, and that can really change your analysis dramatically. And when you change your analysis, you're going to come up with incorrect trading ideas. You're going to think that the market's going to do something that it possibly isn't. So getting consistency with your trend lines is very important. And this is the process that I go through to get my trend lines. And I find that it's a very repetitive process, and it's one that we can fine tune time after time. And with that, consistency comes from my analysis. So first of all, I am going to start off on a weekly chart, and I zoom all the way out. And as you can see here, we've got the highest point on the page, and then we've got the lowest point on the page for the GFC. I'm putting in vertical lines. Let's call them construction lines. And between these two lines here and here, we're in a downtrend. Obviously, it's a crash. It isn't really a trend, but that's how we work with these vertical lines. So if I work now from the highest to the lowest, I want to work to the left of the highest point, and I want to go to the next lowest point on the page, which would be all the way down here. So suggesting between this point here and this point there, we are in an uptrend, and we'll put our trend lines in accordingly. To the left of this line, we need to look, we're starting off at the lowest point, we need to look for the next highest point on the page, which would be over in here. So between this point and this point, we're in a downtrend. We can't go any further left, and we don't really want to because we don't really need to look at what went on in the 90s. So let's go over and work our way from this lowest point on the page here, and we'll work our way to the current market, and then that means that we should have covered all the major trends. So if this is the lowest point, we need to look for the next highest point working from that point to the right, and that would be over here. So I'd put a vertical line there, and we would have the highest point on the page working from this construction line to the right. Now this is the highest point, so we need to work on the next lowest point, and that of course would be over here. So that would be in a downtrend. So if I just get some arrows for you, and we can put in that between the two red lines here and here, we're in a downtrend. Between these two lines here and here, we're in an uptrend. We're in a downtrend here. We're in an uptrend there. And we're in a downtrend between there. So they're the major themes that have gone on since the late 90s to today. And to put the trend lines in, we just start at the highest point on the page, and you can go over to this construction line and just keep dragging it down until the line hits a wick. And as you can see, it hit a wick over here. For ease, get into the habit of snapping your trend line to that wick. And you can go in later and clean them up if they're of importance. Right now, these ones over here aren't important. So we drag this straight down, and you'll see that we'll come over and we will hit this lower swing high wick there, and then the trend line will just get vertical and non-existent. You never want to cross wicks, you never want to cross candles. You just want to start off at the low, work your way up, and you can see that we touched over here. So we snap that one, we put another trend line from there, move over to the construction line, just drag it straight up, and then as you can see, we hit this one here. We don't put a trend line through all of them because this is the highest point on the page and the highest point in history, and you can see it's sort of a double top, but I think when you zoom in, it isn't. And that is the wick. We don't want to cross the wick. Sure, when we were trading throughout this time, we would have a trend line moving up through here, but right now, that's not valid. That's the low, and then we start to get a bit choppy, and we can see that working from here, the highest point, we would hit this trend line, and then it would get so vertical straight down. There's no use putting a trend line in there. It's not of importance. It isn't going to help us with any analysis, so you can choose not to put that one in. We go from this lowest point on the page here, drag it up, and we will hit the wick over here. We would grab another one, drag it up until we hit a wick, and then you can see that we hit the bottom over here. We do the same, we keep going, we hit a wick here. And you can put another one in. Obviously it's going to be pretty vertical and it's not going to have any benefit to the current price, but more than likely it hits the wick down in here somewhere. And that's just from me zooming in the past and realizing that that's what went on. But the trend line is that vertical that it's not going to give us any analysis. It's just highlighting that that's where it peaked. Now we're going to work this downtrend area. We slide our way down and we hit this wick here. Now from here, now on, these trend lines are going to be pretty important because we're moving to the current price. And like this trend line through here was actually important back when the market come down, bounced off it twice, and then faded out, and then finally broke through it, come back and test the back of it, and then that was the sign that this whole trend through here had come to an end, and we're going to keep fading away. And I remember trading that period quite well. So we're going to continue on now, adding in these trend lines. Now we're on the weekly, so to get a little bit more detail and to get a little bit more accuracy, we will go to the daily. So what I'll do is, that's how you put the trend lines in, and we just continue this process, fine-tuning it closer and closer to the current market. But that's how we've captured the weekly and the longer-term major trends. And you can tell by going through this process, it's telling a story where the major trends are, and it's also extending those trend lines out that can be used in history like it did over here. And that's the reason why back in that time you really wanted to zoom in and make sure that you'd snap your trend lines to the bottom of those wicks and got a lot of detail. Right now we don't have any trend lines affecting this area, so it's going to be more support and resistance, and I'll get into that a bit later. So now I'll go into the daily chart, and you can see that it looked like I got it pretty close, but I didn't really. I'll zoom in one more time. I'll snap the trend lines to the wicks, and I'll continue adding in these down trend lines to this lowest point on the page here. I'll put in a support line underneath that low on that wick, and that's the lowest that we've been in the current market. And then right now we will actually finish off with that trend line there, and that's the lowest point on the page, and we've worked our way down. Obviously if we go into even shorter time frames, you'll be getting trend lines working through this area, but now they're not important. So this is where people I find can get unstuck, and this is we're going from the lowest point on the page working to the right, and where's the next highest point on the page? It happens to be recently just here, and you can see it was at that down trend line as well. So that's the vertical line, and between those points we're in an uptrend on the daily. And then that's the high, and we haven't made a new high, and we've taken out some lows, so we're now in a downtrend from this point onwards, and you can't put any trend lines in there on the daily. So all I'll do now is just put in this trend line here, and this trend line is important. We want to make sure that's snapped because we have broken through it, but what happens if we get a bit of a bounce and we test the back of it before we roll over and continue lower? You want to really capture that trend line because it can help with analysis of finding resistance and things like that. I'll put in a resistance line, so that's the current resistance line that on the daily that we really want to focus on. That's the lowest point on the support, and I will put in a support line there because we're going to come through. Typically what I do is I put two support and resistance lines either side of the current price. So if you've got the current price and you've got a resistance line here, you want to look for historical support and resistance as well. And you can see that through here we did get resistance and we did get some support, and I would be putting that through looking for a fall down to this area, and we could get a bounce around this support line. So it has reacted around that price level before, and it happens to be a whole round number at 82 cents for the Australian dollar Japanese yen, which is the chart that I'm on. And that's something that 82 cents is something that I want to write in my diary. Keep in mind that if it gets down around that level when I'm trading on shorter time frames, that there's possibly support there, and I don't want to just assume that it's going to punch through it and continue lower. And then if I was to look at a resistance level, I probably want to look at a shorter time frame. But for now, let's get a line and look for resistance by simply putting it at the most recent resistance level. And we may have to fine tune that because historically it bounced off here. We've got a bit of price action around there, but we've got some wicks punching through it. It's hard to say that it's a really strong one. So let's put that one there in a dotted line, and we'll review that a bit later. So right now we're up to date on the daily chart. Let me fix that up. It's important to go through this process because it's telling us a story. It gets your brain to recognize patterns, to understand where the trend lines are. I can see all the trend lines without even putting anything on the chart anymore because I've been doing this for 10 years and the exact same process over and over again. When I first started, I did it every single day, clear the chart, start again, because it gets your brain into that method of analysis and it becomes second nature. And that's really where you want to get to. You want to get to that point. On the 4-hour chart, we can clean up things even further. I didn't snap to the bottom there. And you can see I missed the wick there. It's very easy to miss them, so you really got to tidy things up and get things accurate. So we've had this uptrend line, and then as you can see now that we're zoomed in, another uptrend line would need to go through here at the time. And then when we broke through here and tested the back of it, you could have traded the breakdown of that based on your analysis at the time. We didn't actually get any support at 84 cents or through this area here. It pushed straight through it. It's come back up, tested the back of it, and then it's rolled over. So right now we're still very much bearish, and it doesn't look like it wants to move any higher, but we're testing 83 cents and a breakdown of 83 cents that it's bounced off. And then we currently got support off it yesterday. This is a 4-hourly chart. So right now, if we were to get a breakthrough today in the European session or the New York session, I wouldn't be surprised if we moved down to 82 cents. So we're just using these trend lines just simply to paint a picture and to come up with some analysis. And we've put in some support and resistance lines, but the current support right now would be here underneath these two. I don't need to make that dotted because there's no need to review that because we know that it's bounced off it twice, and then a breakdown of that would open up into trading prices around in this area here. Okay, because we've identified that this historical level at 82 cents could come into play. So we could get a 100 pip move to the downside throughout today's session should the Australian dollar come under a bit of pressure or the Japanese yen strengthen as we've seen in the current market. All right, so that's the analysis on how I put in trend lines. Before I get into things in a bit more detail, at this point here you can look for patterns. But at the same time, I think what I should mention is you can look for patterns at any point and on every chart. And I do. I look at charts from the weekly right through to the 1-hourly, and I'm looking for patterns. And I've seen a pattern straight up on this chart here, and I've posted it on Twitter. And it's just a downward range, downward channel on the Australian dollar Japanese yen. Let me make this thick. Let me change these settings, and I'll identify the downward channel. So that's the downward channel there on the weekly. And then you've got another sort of adjustment that we've had to make in there. You can sort of look at this being a channel in the black, and let me make a new color. I'll go pink. And I'm just going to fine tune this channel that I've been focusing on. Okay, so we've got the black channel, and then within that, throughout the more recent period, it's got a little bit steeper to the downside, where the wicks have got lower and the swing highs have got lower on the top here. Now, if I was to go into the daily, that'll become a little bit more apparent, and I probably need to clean up them lines, but here's the channel that we've been in. And let me delete that and do that one again. I made a bit of a mess of this chart, but basically you can see that through here we've touched there, and then we touched there recently, and that's where I posted saying that this downward channel is testing resistance, and then fundamentally I was looking for a reason, and the RBA was the reason for the market to start selling off, and a risk-off market environment that we've also had has helped. So when you're looking at that on the longer term time frames, and you've got the bounce up through here, and you're looking for a breakdown to the downside, and you're looking for technicals as well as fundamentals to help support your trade idea, we could actually get down and make a new lower low if this channel was to continue. You never assume that, oh, if I get in here, I'll just get out down there, and then you just set and forget. You have to continually monitor every day the market and see what it's doing, because this 82 cents would be a major support level that it could bounce off. And if I just quickly put it through there, you can see that we would have a shoulder ahead and another shoulder, and it could break out to the upside. That is one scenario that you could look at, but 82 cents is something that I think it could get to. If it breaks through 82 cents, well, then it could get down and trade down in this region, and then you trade it through this region, and then you can assume that it's going to get down there once it takes out the lows. But until then, you've got to continually monitor and work the trade, and continue to understand what the market's doing and why the market's moving. But that's how I look for patterns, and that's just one pattern that I picked up on, and I've tweeted about, and I'm continually looking for patterns. So you can tell that right there we hit, and if I just insert, I put a lot of things on there to remind myself. I put on like a highlighted spot that basically says I hit the downward channel, and I've got to remember that in the long term. I think that we are trading in a longer term downward channel, but in the short term, in the daily price movements, I need to be aware of all the finer aspects of the market and the levels and the trend lines. So that's how I put on trend lines. Have a look at the Australian dollar, Japanese yen, look at your chart and see what you come up with. Right now, if I go to a 1 hourly chart, it's a little bit hard to put in the trend lines, and you want to know when to stop. And where to stop is where it gets really messy, and where things get, I guess, really hard to really see what's going on. So that's a valid trend line on the 1 hourly. I would then snap to this one here, and then from here I have to go down to there because that's the lowest point on the page. And then technically that's the next highest point on the page. So you would have to go to this wick, and then you would, let me put in a construction line. Okay, so it's a downtrend between these points on the 1 hourly, and then between, if I now go to a 30-minute chart, we're going between this point here and this is the next highest point of the page, continually moving to the right. That trend line's valid. Let me go to a 15-minute chart. And then the next trend line would be non-event, and I wouldn't put it in, but you should, just in the interest of following the rules and getting into the method of putting trend lines in. So then we go from this low up to that wick, sorting out that high. And right now we are in a downtrend from this point onwards, because that's the highest point on the page. And let me make that solid now. I don't need to make that dotted or anything like that. And you can even highlight it if you need to. Put things on charts to remind yourself that's the current high, that's the current point that the market's looking at. Now, if we get a bounce, we're testing the back of this trend line. That's why putting these trend lines in is pretty important in getting things right. We know that when a market tests the back of a trend line, it can test the back of it and then fade away. And then we would be looking for, you can trade the rejection of this level, especially if you were to believe that there was major resistance. See how there was support all through here. We had some wicks through it and things like that, but that level's pretty important. Well, that becomes resistance, and you could basically do a short-term trade, shorting it off the rejection of that level on some even shorter time frames if you're into scalping. And then if it was to break through that, well then, you take the hit and then you let it do what it's got to do and it moves back into this consolidation zone. So that's something that it wouldn't be trending anymore, and you'd stay out of until it broke out of that zone. And then you could get into some swing trading heading lower. So we're on a 15-minute chart now, but you can tell how we've moved down through the time frames, and we've really got the analysis from the longer term view that we've established that we're in this downward channel. We've got established that 82 cents is important, and if it breaks through 82 cents, then the next level of support, 83 cents, the next level of support's 82 cents. We've got all that in our head. We're moving and looking for some entries, and we've identified a resistance level, and we've identified that if we were to break down through here and look like we're going to continue lower, a trade down into 82 cents even would be the next support level, and you'd probably get out a little bit prior to that, because we also established back here on the daily how strong that level actually is. And it doesn't have to touch it to the pip. It's not a fine science, and you don't want to get greedy. Get out 10 pips before it or something like that, instead of trying to squeeze too much out of the trade, and potentially it bouncing and heading further north, as we spoke about, was a possibility, and you missing out. So just trading down through levels and using trend lines to technically tell you a story is pretty important. So that's where I want to leave you. That's the process, putting in construction lines, zooming all the way out on a weekly, identifying the major trends and themes, never letting a trend line cross through the wicks, and then working your way down into the current market. And every time you do that on every single chart, and hopefully you're doing it every single day, it's telling you a story of the price action, and you're doing it very consistently. It's a very repeatable process, and then your analysis should be technically correct. And with that, you can come up with some sustainable trade ideas. So whether you're a scalper and you wanted to trade the rejection of this level, well, then that's entirely up to you. Whether you're more or less waiting for a breakdown of this level in today's session, and you want to trade a potentially larger move to the downside, well, that would be great. How to update these trend lines is pretty important as well. So right now we're in an uptrend between here and here, but as soon as the price takes out this low, well then this construction line becomes null and void. These uptrend lines would become null and void, and this would move over to here, and you would have price action down here, and you'd be looking, because you'd still be in this downtrend from here all the way through down into here. So you need to continually update your trend lines with the current market, and they continually evolve, and being able to update them consistently is pretty important. All right, guys, I'm going to leave that with you. Have a look at your Australian dollar, Japanese yen chart. It is the 7th of April. For those of you who are watching this a little bit later in time, and you'll be able to keep an eye on the analysis and go through that process yourself and see whether you come up with a similar trading idea and concept. If you've got any questions on how to put on trend lines, it is a very basic part of your trading that you really need to master if you are going to move into the technical realms of trading. So you need to get this right before you look at any other strategies or any other concepts or ideas. As you can tell, this is really a strategy in itself of working out what the price is doing, and we're going to trade off the price action around these technical levels that we've established. And as you can see, it's rejected it, and we've already moved more than 15 pips lower. And this is a 30-minute chart, and you can have a look here on a 15-minute chart, and you can see it's rejected it and heading lower. And you know, we might get an opportunity to trade this lower. I'm not going to talk about trading right now and getting in and stop losses and all that sort of stuff. I just really wanted to emphasize the process that is repeatable on putting on trend lines. I hope you guys found this video informative, and as I said, if you've got any questions, just let me know. I'm happy to answer.